All right. Good morning, everybody. Good morning. Good morning. Hope you guys are all doing absolutely amazing. I am Chuck Fulkerson. Welcome to our session. We're going to get rolling here, taking a look at our prepping for the open session. So, for those of you that are new to what we do here, typically I do a daily market commentary, which is done as a pre-recorded, and I go through a couple of different things every day, and I look at essentially the same 10 to 12 futures markets. So today, what the goal is to do is to look at live market conditions and identify some opportunities kind of as they show themselves and as they get rolling. So do me a favor, make sure that you can hear my voice. Just type in the chat box. I'm going to share my screen here in a little bit. So let me turn my screen sharing on. All right, so you should be able to hear my voice and see my screen. So welcome all of you that are here. I'm glad you like the live one, Ingrid. Good to see you on here. John, good morning. At chilly Minnesota. It's not so chilly here in Houston, Texas. It's pretty nice here in Houston. So all right, let's go ahead and get rolling. So we had a live trading room yesterday for those of you that were that are Traders Army subscribers, and we had it was pretty terrible because I was in California during that atmospheric river, and I got stuck staying in a hotel that did not have good Wi-Fi, and then I tried to use my phone, and it had even worse results there. But what's kind of funny is that we found some pretty good trades anyway, sent them out, and we're going to go over some of those and then what's going to happen for today. So kind of getting rolling on the S&P. We're up about 8 points this morning. So this was the level that we had looked at yesterday, was the origin of this fairly strong move up. Okay, we had a fairly strong move up here out of this level, and then we were coming down in the session yesterday morning at about 7 o'clock Central, and then we came down, hit here, and reversed right up off of it. Now later in the day, though, we started to see a little bit of weakening momentum, and so we pulled that position off at a little profit target, and now we're back to that area a second time. Now, here's my fear coming back into it a second time. I'd love to tell you that I got long again the second time, and I've rode this thing up overnight from 27.29 to 27.52. I did not, right? I'd love to say that that's exactly what I did. Unfortunately, that level did not present itself as a good opportunity for me the second time through. So what I do is I remove that area from consideration in the future. However, one thing I would like to point out is that while that level, I removed it from consideration for something in the future, that area now, this was the kind of the level, that area now becomes a potential for a breakdown in the future. Okay, so for those of you that watch what I talk about regularly, when we look at breakdowns, what are my rules on how many times a level needs to be touched in order for it to set up as a good breakdown? Does anybody know? Type it in the chat box if you know the rule on that one. Okay. And so when we look at that, this level has already, exactly, John, this level's already got 2 touches. And since that level's been touched twice already, a third time in, if we base in here, if we start basing inside of this level, this now becomes a really strong opportunity for a breakdown position. Now, I'm not saying that we're going to break down. And as a matter of fact, when I look at my 4-hour chart clearly still tells me, should I be a buyer or should I be a seller? What should I be in this market? A buyer or a seller? Yeah, this has no question that I should be a buyer, right? No question in here, I should be a buyer. However, I need to take into consideration a few things when I'm looking at a smaller time frame, right? When looking at a smaller time frame, I need to take into consideration the fact that we are coming to some overhead supply in the 4-hour. Now, one of the things, and I hear this a lot, what's more important, trend or where we are in the supply-demand curve? I will tell you in my experience that it all comes back to time frame. And in the 4-hour chart, if I see price rising like this, it's going to reverse at daily supply, right? It's going to reverse at daily supply. But as we come to 4-hour supply, exactly right, Bryce, you've got it. As we come to 4-hour supply, we will see oftentimes a slowing of momentum, right? Look at the last time that we came to some quality 4-hour supply. It was right through here. This little wick over wick level, this little base area here, we hit it, we slowed momentum, we came up into it, and then we got a little sell-off. Now, that's not a huge sell-off, but for a day trader, you can get a nice little move out of there. So my point being is that if we get a little move off of this level and we break down, this is really the area that I talked about, the breakdown on the hourly chart, you may get an opportunity if we break down below, call it 27, call it 27, 24 half. So a breakdown trade does present itself down there at about 27, 24 half. In the small time period. Now, take this for what it's worth. And I hate to say this, and once again, I say that every time I say this, I use the caveat. I'm not being political here in any way when I say this, but we never know what President Trump will do or say over a weekend. And so my bigger fear is holding one of these positions, a futures position over a weekend. I'm not concerned with holding an options trade over a weekend because at least I got a better control over what I can lose. But in a futures position, a gap that goes against me is something that could be a very, very, very big problem and something that I need to be very aware of. So I'm gonna wanna be cautious of getting into that today if it happens later in the day or something like that. Just simply because I want to be cognizant of what can happen on there. So hopefully that makes sense to everybody. So if you've got any questions on that, leave it in the chat box. But that's what I look for on the ES. Now, for as far as a very short-term day trade, if you're looking for a day trade opportunity, you know, as we've rallied up in the overnight sessions, we've put in a couple little levels of demand here. And so if you wanted to look as a day trader, this little level right here, if we do pull back today before the breakdown, this little level appears to be a pretty good one. Excuse me. This little level here, 27.33 half by 27.36 and 3/4. So right in here, little bit of basing, nice move up, another little bit of basing, another move up. We came back down and we're unable to get into it. Now, I would oftentimes select this level, right? This level is the more obvious. But how many times have you seen? How many times have you seen you know, because it's more obvious that the more obvious level just slightly gets blown through, and then after just slightly getting blown through, it reverses and comes back up, right? Not that anybody's ever seen that happen. So I know that's one of the things that drives me most crazy is when I see a more obvious level and price just goes right below there. Okay. All right, so there's our level that I would look for on the ES today. Next would be the NQ. So in the NQ level, so looking here at our NQ level, we see the same. This was our level from yesterday, right? I mean, I'm just going to pop up. This was yesterday's. We posted some of these trades yesterday. This was what it looked like yesterday in that NQ. Let me zoom in on that a little bit. So yesterday in the NQ, when we were looking at it, price was coming down into here. Now, what do we have on our side? What's going on in our favor when price was coming into that level yesterday? Okay. What's coming on? What's happening in our favor when this happens? What's really happening is we're getting a very strong arrival, right? That's what's going on, is that our arrival is very strong. And when I get that strong arrival, it sets up for a better opportunity and a potentially better fit and a better trade. So we got a nice little move out of that level right to our opposing fair price value area inside that NQ. So since we got that move right to the fair price value area, now we came back in and hit it again. And like I said, I'd love to tell you that I took it the second time through. I did not. Okay. I did not catch that the second time through because frankly, I didn't anticipate it being quite that good. But this sets up, again, very similar trade setup that we have in the ES. Now, we're a little bit stronger today in the NQ, so I don't think I would take the breakdown in the NQ like I would in the ES. But if I go to the 15-minute chart and I look on the 15-minute chart, the same 15-minute level that we identified in the ES also rears itself in the NQ. Now I need to change my color here because my color goes to a kind of a more of a pink color in there. Okay, so that would be the level. Let me check. I got a couple of questions in the chat box. Let me see if I can get to those real quick. Hit just below or put the stop where the Globex low. Ingrid, are you talking about on the in the ES 15-minute long? Is that the one you're speaking of? And then John says, you mentioned at times candle on candle setup. Yes, John, I do talk a lot about candle to candle trades because a candle to candle trade is something that is a pretty useful style. And so I use candle to candle trades oftentimes as ways to get me into them as confirmation style. And what a candle to candle level essentially means is, like, let's take this example down here. I wouldn't get long. Let's say that I didn't really trust this area down here. I wouldn't get long until I got a candle with a higher high. Well, once you get one candle with a higher high, you move your stop underneath the next candle's low. So now every candle you move up the stop underneath the prior candle's low. And if you notice, you got, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles in a row before you got one with a lower low. And that's how you trade the candle to candle methodology. Now, it doesn't really work on 15-minute charts. You want it to be really 4-hour charts and above are better for those. So, no, John, I don't necessarily need more candles for a level. I'm okay with this as a candle for a level because the thing to consider, and let me just throw this on here. This is something interesting to think about, and I don't talk too much about it in the daily market commentary. But when I look at the volume profile, okay, when I look at volume profile, what that tells me is what's the amount of volume that's being occurred at each price, not so much at each time. And when I can look at volume profile, I don't really care so much about time as I care about price. And look how high my volume profile is at this particular price. So right in this area. So that tells me that a lot of transactions have occurred at this level, right? And so might there still be unfilled areas in there? That's what I'm looking for. I'm looking for where are those volume areas that I know that there's going to be some unfilled orders left. And the other thing to consider is that's whole round number support. Okay, that's what I look for. Okay. All right, so there's the area that I would look for as a potential reversal point, and that's kind of moving forward. So, all right, next let's look at the Russell, and I don't normally look at the Russell in the daily market commentary. This is one of them that we cover in the live trade rooms, and the Russell's been one that's been pretty good for us here lately. But I definitely want to talk about this one. John, that's actually an indicator that's right inside. You can get it on pretty much every brokerage firm has it. The key is just knowing how to read it. So, so when I look at the Russell, the 4-hour, this is the one where I'm seeing the greatest momentum slowing. This is where I see the greatest momentum slowing down. If you look carefully, it's pretty easy to see sideways price action. Now, one of the things that you can do in order to just confirm momentum is put a momentum indicator on your charts, right? You can put a momentum indicator on the charts, and we can see that while in price, I do have some slightly higher highs. In momentum, I am significantly lower, right? Now, that does not mean that we're going to reverse. It in no way means that we have a reversal coming. I never rely on an indicator to tell me that reversals are coming. However, it does give me a warning that things may start to weaken, right? We may get a little bit of weakening on there. And so if that weakening does occur, this could then be a pretty nice opportunity. Now, on a 1 hour chart, if I go down to the 1 hour, the Russell did not come down to the same level that the Nasdaq or the S&P did last night. And so while this would normally be my breakdown in the Russell with its slowing momentum might actually be the better opportunity for a breakdown moving forward. On a 15-minute time period, if I go to that smaller time period, we don't have the same price structure in the overnight hours that we did in the S&P or the Nasdaq. So I actually like the Russell a lot less than the other markets today. And I wouldn't be trading the Russell, right? Sometimes discretion is the better part of valor, and I'm going to want to stay outside of taking too much risk because there's no reason for me to jump in unnecessarily. So those are the equity markets. I don't typically take a look at the YM, frankly, because if I'm looking at the ES and the NQ and the Russell, I'm getting enough movement. But before I move on to commodity markets, do you guys have any particular questions on those equity markets? Particular questions on those equity markets? So if indeed something comes up, certainly go ahead and type that in, and I will gladly cover those for you. Over the course of the next little bit, we got a few more minutes left inside of here. So let's move on to crude oil. Oh, where would I put my stop? Are you talking about in the S&P one, Ingrid? Sorry about that. So in the ES, that stop for me, because this is a 15-minute, I forgot to change the color here. Technically, that stop should go below the pivot low, right? In all technicality, that stop should go below this pivot low here at 27.28. I'm okay if you just place it below this zone, but know that if we base in front of this level, that's going to completely invalidate that level for a limit entry, and I'd have to switch to a confirmation style. Okay. That's where I would make that shift. Same thing in the NQ. Technically, the stop should go if you're following, the below that pivot, but that's pretty far away. So I'm okay if your stop is just below this level. But once again, watch out for basing in front of that level. Okay. Let's see, Bryce. Do you consider RTH gaps? I don't know what an RTH gap is, Bryce. Let's see. Do you keep an eye on the U.S. dollars or bonds when trading equity futures? Not really, because what I've found is that those correlations are important. Regular trading hours. Sorry, Bryce. Not all that much, frankly. And let me answer Lisa's question first, then I'll get back to your question. So Lisa, I do look at those correlations, but not all that much, simply because I don't find it necessarily useful and reliable to put too much weight into those, because essentially if one comes into supply while the other's coming into demand, well then that's going to show up pretty commonly anyway. So occasionally I will, but it's not something that I lean on. I find it to be more work than I need to do. No problem. And then Bryce, to your question on the regular trading hours gaps, not really. I don't think too much of those, frankly, because there's so many good turning points at the 2 a.m. level. I have actually found that the 2 a.m. level is sometimes the best time of the day that I see strong reversals. And so I really use that Globex session to look for high probability reversal times. The gaps on the regular trading hours, I've seen that go in our favor, and I've also seen it go horribly wrong. So it can go multiple ways. So those are the great questions on both of those. All right, let's move over to crude oil. I want to talk about crude here real quick. I'm going to move to this CLH as we had the gap on the rollover. So we can look at the gap level. So this was our trade on the CLH, and I would anticipate it a little bit of a move off of here, and then it rallied up. Now it hit our crude oil level and then came back down. Now it's a confirmation style entry. So this was the level. I showed you guys that chart that I had of the trades that we had looked at yesterday. Let me make this a little bit easier for us to see. I zoomed in way too much. Here was the level in crude oil yesterday as I was looking at it. I anticipated one of these two areas to be a pretty strong reversal. Unfortunately, we came down through that lower level, and you're going to have that happen from time to time. And then we came right back up to this upper level. Right, we came right back up to this upper level, this 55. Right around that 55 area, and we hit it, but we got a very weak move away. So if you took that level in the overnight sessions, then you got a little bit of a move away, but now we're back up into it. I don't think the level is dead, and I'd be okay if you said, you know what, Chuck, I'm going to give this a try, and I'm going to go short right now. Oh, it hit your oil entry and didn't fill you. Well, and I think it's still okay if you're in a short. But this to me now is a confirmation style entry, right? Now we've hit the confirmation style entry. So if you're short oil right now, notice that the basing below it is pretty tight. So I would move my stops very quickly if you did get in there. Okay. Yeah, I'm glad, Ingrid, I'm glad those 2 a.m. levels are working well for you. You could do candle to candle on this, Ingrid, if you really wanted to. Wait for the next 1 hour candle and then get short when we get lower than the next candle's low. Because I think there's a real possibility that we could certainly trade back down to here. My fear is all this basing we got below this level, right? What does basing below a level do? Okay, what is basing below a level is really, really the kiss of death, if you will, right? For those of you guys that are regular subscribers to the room, one of the things that we do is we have we call it the trade optimization plan. So we have a worksheet that we fill out for our trades to tell us the probability that trade's going to work. We call it the trade optimization plan, or the top. It's a top performing trades, and so. This one, in my mind, wouldn't score high enough as a top performing trade for me to jump in. But yeah, Ingrid, you're reading my mind. I like it, girl. You're reading my mind. It does set up for a potential breakout to the upside the more often that we touch in here. So if we come down from here, let's say we get a little bit of a weak move, and then we base in this level, now it sets up for a potential breakdown. Okay, now a breakout to the upside. Now when I look at crude oil on a 4-hour chart, if I look at this thing on a 4-hour, my 4 hours telling me, okay, well, we're putting in a bit of a base, right? Think about basing. When you look at a base, it's an accumulation area. It's where the institutional investors are accumulating, and they're finding those positions the best way that they can. So if you've got questions on that, on those, just shoot me an email. Let me know. I don't have time too deep to go into base structure, but that's what we look for, is where's, it's all about when is that base being formed so that price can then rally off of it. We could be seeing that happening here in crude oil, which could very easily, in my mind, take us back up to $65 a barrel over the course of the next few weeks to few months. Right? That ultimately could be, I think, a really, really good place where price could come back to. That to me is a linchpin number, and on a longer term scale, that's what I see. Yeah, potentially buying on that confirmation. Okay. All right. So real quick, Dean had posted something in the box a little bit earlier for me. Dean is our director of social media. So Dean had posted up that if you guys are, those of you that are not subscribers, if you're interested in learning more about what we do at Traders Army, feel free to go to the site and take a look and see what it is that we do. I'll get to gold here in just a minute. But feel free to jump into Traders Army, take a look and see what we do. We've got a bunch of courses in there, live trading rooms, private trade feed, a bunch of different things in there. And then if you use the promo code TRADEUP, you get 60% off 60% off your first month if you wanna go in and give it a whirl. So promo code, I'll type it in the chat box so you can copy and paste it. TRADEUP. All right. So let's move on to gold. Somebody had asked me about gold earlier, and I want to make sure that I cover that. Dean, your comment was moving to the bottom of my chat box, so I had to make sure I talked about it before I lost it. All right. So let's look at gold. And in gold, when I go to the 4-hour, we had a pretty strong kind of move up on the 4-hour, and now we've just kind of started this hem-haw basing area. Now, we came back to the level here that would be considered this gap. Now, this gap is on a rollover gap. So if I just looked at the actual gold contract itself, all right, if we just look at the actual gold contract itself, that gap certainly does not even show up, right? Doesn't even really show up. So if I just look at the J, at the J19, we don't see the gap. So while that gap is there, just due to the contract rollover, it's not really something that I'm overly concerned with. But it does still pose a potential, primarily because of the whole round number support that it creates. Okay, now we've come into an area that looks to be a potential breakout. And the reason this looks to be a potential breakout is because we're retesting this supply area again. Now, I'm not so sure that I would take the short on this, because my big picture, is it telling me to be a buyer or to be a seller or to wait, right? What's it telling me? Be a buyer, be a seller, or wait? Because remember, this is the 4-hour chart. My 4-hour chart is a very important time period. And when my 4-hour chart is just chopping along sideways, not giving me any sort of indication as to what may happen, I'm going to always just go back to discretion is the better part of valor and probably hold off. Now, if you really, really, really are dying to get in and you want to do something, right? Frankly, if that's the case, you probably shouldn't be a trader. There's no reason to force the trade. But as I look further to the left on a 15-minute chart, I don't really have any super clean supply above me. And I don't really have any super clean demand below me. This area here is not too bad, right in through here. So if you wanted to give that a shake right there, you've got an opportunity. But once again, remember, probabilities are always going to be a bit lower when we're going down to 15-minute time periods, and when the 4-hour is telling me to be a little bit more sideways. So those are our commodity markets, major currency markets, the ones that I look at the most. Actually, you know what? Let me take a look at nat gas. Because nat gas is one that I'm gonna take a look see at. Did not come to my potential reversal point yet. Got a level here in nat gas that I'm still holding off on. For those of you that do trade natural gas, there you go. This 9/11/43, 9/11/43, 9/12/09 up in here would be the reversal point. A little bit of basing, very strong move away, and this is a base drop below a pivot high after a descending triangle breakout pattern, right? So I do look at price patterns and what price patterns mean. And so when you think about what price patterns mean, that's something that could be kind of important. So, all right, let's slide over real quick and take a look at our currency markets. And when I look at my currency markets, so yesterday we had a really nice setup in the euro. So once again, this is back to yesterday's price order sheet. So this was our trade yesterday in the euro. We had a very strong rally into the level. So when I get a strong move into a level, we're looking to short coming out of that zone. So that's what it looked like yesterday coming into that zone. Today, what we're seeing is that price came into that level and we got a really nice move away, and it's continuing its strong drop. So leave me in the chat box. Let me know if you guys jumped in on that thing. If you were able to pop in on that one, let me know if you're able to hit that one or not, because that one was a really, really good setup. Now, by the way, if you're not a euro futures trader, you know, one of the things people ask me is, Chuck, do you trade Forex? I look at Forex all the time. I just use it looking at let me get rid of all my drawings here. I just use it looking at the other time frame charts, right? I use it. I look at it using the currency markets. I use the currencies by trading futures, right? So futures still can get me into that position. So Euro USD, we still had the same kind of price action, same solid move away. So, you know, when you look at your at your currency futures markets, they can act as a proxy for your Forex pairs. And so I'm actually going to do a video on that. I spoke to somebody yesterday about that. He was asking me about how to do that, and we're going to do a video and post it to the site soon about how do I look at a currency futures chart and then convert it to a currency pair. So I think that's a good one. Well, yeah, the dollar strength will cause the breakdown of the euro. And really what it is because what you're trading is the dollar against the euro, right? I don't really look at the dollar index because I look at the individual things that I'm trading against. And those give me enough indication as to the trade that I'm looking at. So that's really, it's because I'm trading one against the other. So when one goes down, the other one is going up because that's essentially what the euro is. This is the euro against the dollar. So they have to move inversely. Now, the other level that I had set up yesterday was on the Canadian, and look at what's happening in front of this Canadian dollar. What do we see as occurring here in front of this Canadian dollar level? For those of you that trade the USCAD, the Canadian dollar level. Okay. When I look at this US Canadian dollar level, the thing that I'm most concerned with is now we have a very nice little sideways price action before a strong move down. We almost came into it yesterday, came super, super close into it yesterday and then sold off, and we got really close. And then we moved away, and now look at what's happening. We're basing in front of it. So this level, in my mind, is no longer a limit entry. This has to be a confirmation style entry. And there are very specific rules on confirmation style entries because I don't want to get into something that has low enough probability. And if you look at it now, I've put in 2 consecutive higher swing lows on this hourly chart. Now, my 4 hour is still telling me, right? My 4 hours telling me, well, it's probably better to be a seller with lower swing lows and lower swing highs, but it's kind of inconclusive. So I'm still got the seller position in place. I'm just waiting on it a little bit because I want to be a little bit more cautious going forward. Okay. In the Aussie, we've got a breakout long set up above this region here. I don't think we're going to get to that today. Matter of fact, we may not get to that till sometime next week. But does that mean that I have to leave the line, that I should just forget about it? No, let's leave the lines on our charts, and we'll look and see if we get to that area next week. I don't think we're going to get there today. We might, but I just don't see that happening. Now, part of the reason why I would like this is because look at this area we have above it. We call this clean air. There's clean air above current price, and that clean air that's sitting there above current price is ultimately what we're going to look for as the opportunity to get long and for price to kind of move higher. So that would be why we're looking at that breakout inside of the Aussie. Let's see. Let's pop to this last page here real quick. And I think earlier I showed you the yen, and I meant to show you the nat gas. What's funny is how similar those levels look. I showed you the yen, and I meant to show you nat gas. I was like, those numbers don't look right. Here was the nat gas level. That's what happens when you have a great attention to detail. The nat gas level is 2663, 2672. Drop base, drop right below that pivot high. Now there's another one in here where we could see a reversal, but I'm not as clean on that one. Now we've been playing the gap on nat gas over the weekend, and for many, many weeks in a row, our gap structure worked out pretty well. This week it did not. We gapped up. You take the long when we get above the first candle's high, and it rallied pretty nicely, allowing you to move your stop to break even, but then it came down below the first candle's low, which would stop us out. So I think that there's more room for price to fall. And if you wanted to trade nat gas on a candle to candle style, I actually think that right now is setting up for a decent short opportunity in nat gas if you want to trade that in a candle to candle style. All right. Great British Pound is continuing its weakness. There's a lot of dollar strength, obviously, that's contributing to that. But the Great British Pound weakness is continuing. Normally, I would like to see us rally up to one of these supply levels to get short on the 4 hour. I don't know that we're going to get a quality rally up to one of those supply levels. This is really a nice opportunity to get short. if we rally up into that. It'd be nice to see us gap up over the weekend and come into here and then short it on that level. But I'm not sure we're going to get that opportunity going forward. So keep an eye on a potential breakdown on this one. I think that we could get a breakdown level off of here, right below this region there. So, all right. Well, that is all of our futures markets that I was going to cover for today. When you are a regular Traders Army subscriber, we dive a little bit deeper into options as well, but I don't have time to get into too many of those positions today. But for those of you guys that are subscribers, take a look at the options trade worksheet. We've posted a number of trades on that worksheet over the last couple of days. And I want to see, really what those look like, moving forward. I'm going to wrap this thing up for the day. If you guys and gals out there have any questions or anything that I can do for you, please certainly don't hesitate to reach out. My goal is to be here as a resource to you as best I can. And then if you watch the daily market commentary every day, great. Do me a favor, leave a comment, leave a thumbs up, whatever it is, and tell some of your friends about it. It's awesome if they get a chance to tell your friends about what it is that we do. We do our best here to help you get where you want to be. So thanks so much, everybody. I hope you have an absolutely amazing trading day. Those of you guys that are subscribers, I'll see you Sunday night for our live trading room, and everybody else, I'll see you on our next daily market commentary.